Okay, welcome to the Swing Trading with Cycles channel. Where we time the markets without predicting, because you don't need to predict if you can analyze a trend and then identify those trend reversals, get in early so that you can ride the trend for as long as it exists. And obviously, you use that analysis to figure out when it's prudent to maybe lighten up, right? When you experience a swing high, for instance. So we'll start on the weekly chart of SPX here, right? And so just to sort of be very clear here, right? We kind of did something like this, that, then this, that, this. Then we came down here. And now this seems like it's serving as a lower high. So we would expect that we come down and make a lower low. But we also know that next week we have the CPI print. So that's really important on the 13th. So that would suggest, and it's October 7th. And so we're going to get the CPI number on October 13th. That'll be next Wednesday. So if you go back to the daily chart to zoom in a little bit, today would be day 23 of the daily cycle. We have this swing low here on day 18, and it hasn't failed yet. Certainly hasn't. We need to essentially make new lows below 35.84. But unless there's some kind of Herculean effort to the upside, it would seem like we're going to crash below that. I mean, we've already closed well below the 10-period moving average. That's nothing magical at all, but it's just a further indication of very bearishness where, like, okay, we had this little gap up. And yeah, I guess you could call this an island reversal too, right? Like we went up and then down, right? We consolidated for 2 days after this big move up. That's interesting. And again, the CPI print, the 13th, you could see that being a turning point. That would be day 26 of the cycle. Again, today being day 23. Trading days, these are trading days. And so if we look at the monthly, what's happening with the monthly, right? So this is important to understand. The monthly opened at 3609.78. So once we go below that number, once we go below 3609, we are now red on the month, right? And so we closed at 3639. So another like 30-ish points, a little bit less than that, and the month goes red. But you can already see it's not shaping up to be so rosy. I mean, some kind of really cool CPI number could really make that change, right? At the same time, you could see a world where you get the kind of situation where you get a rally, right? Like, let's say we get that, because that's the thing, right? If you go back to the daily chart again, if you're really trying to like really think about scenarios, that's the way to think about it, scenarios. If day 26 is a real pivot point, let's say a low, right? So let's say we drip down below, we make a new low below this 35.84 level, but then we get a bounce out of that, right, from the CPI print. You could see a world where some more hawkish talk from the Fed is your next catalyst for that next lower high, right? Because this is you think about it, this is your daily chart, right? This is a lower high, that's a lower high, that's a lower high, that's a lower high, right? These are lower highs. And then you're like, oh, no, wait, this is a higher high, right? This is a higher high than this one. And we like, okay, this is exciting. And then we start the downtrend. That's a lower high. That's a convincing rally. That's a lower high. Oh, that's a lower high. That's a lower high. Like, that's how it works. You have to identify the trend early. In this case, the swing high below this, that's how this is marked. And these are obviously much more clear in hindsight, but that's the point. When you use multiple time frame analysis, you can identify them closer to when it happens. You're not going to catch the exact top or the exact bottom. That's not possible to do consistently, but you can certainly spot what it happens in like close enough to after it. Like you'll get in as early as possible, right? Like whether it's within days or weeks, depending on if you're talking about a really long-term cycle. So that's the SPX. And if you look at the Qs, same idea. My God, the Qs almost went red on the weekly chart. And the important thing, I didn't mention this on the SPX, but same idea. With all this wick, it means best case scenario, we're going to open as an inside week. Worst case scenario, it's a gap down, right? Which you can see that. And you could see a gap down and that ends up with a recovery by the end of the week. Who knows? But you're certainly nowhere near the top of the range. So it's a very bearish outlook. Again, going back to SPX, let's say, same idea, right? Like if we're closing here, right? Which means best case scenario is like we're like right here maybe, right? Like when we're open. It was a massive inside week. Possibly a gap down, right? Like that would be below 3604, which is not that far from here, right? 3639, so it's like 35 points. Some kind of, a bad open on the futures kind of thing. And if we go to IWM, let's look at the numbers on that. Right, same kind of idea. In this case, it's day 24, but all the same idea. I didn't call this out so much, but this island reversal is a swing high, right? Like just to be super clear, right? Like that. It's the same pattern you saw, in the Qs and SPX, but like it's a swing high, right? You have a candle that makes a high. In this case, you essentially have three candles that form a compound candle because they all sort of consolidated in the same range, and then we came down. Now, we could certainly get a reversal to the upside. We'll see. That's why you watch it in the action in real time. But look at this gap that never got filled. Or this will get filled at some point to the upside. But I mean, then we just kept moving lower. So you have to sort of, and in some ways, I guess, yeah, right. This gap just got filled by that, which you could say, oh, well, that maybe is bullish. We'll see. That's your daily for IWM. And on the weekly, same kind of idea, except in this case, we have much more distance between the low from last week and this one in terms of the way we closed, which is interesting. But that just probably means there's more room for IWM to fall. And the monthly does not look promising either. Yep, nope, not really. And I tweeted this, chart out where we had the multiple indices, right? Like, so this thing. So we have the way, how did this close? So silver just drooping along that line, right? Bear flagging essentially. Gold didn't quite get to that level, but just kind of heading there. We'll see what happens when it opens Sunday night. S&P really kind of drooped down right below that level pretty massively. We got a little bounce. This seems like it's just setting up a lower high. And the Dixie pierced that little level, kind of a double top situation here. And now this is actually a little swing high on the hourly. So that's your like kind of micro level there. So we'll be really interested to see how the futures open on Sunday.